Hello friends, welcome to the course of Goods and Services Tax on Awdhesh Academy. Today we are going to start the first lesson of this course, that is constitutional provisions of GST. You may be aware that to implement the GST we had to change the constitution, and that was a very long process. So what are the changes which has been made in the constitution? We are going to learn today. But before we proceed, let us learn about the evolution of GST in different part of the world. First of all, you should understand that France was the first country which has implemented the GST in 1954. So more than half century ago, France has implemented GST. Thereafter, Canada implemented the GST in the late 1980s, and they replaced manufacturer sales tax by GST. In the year 2000, the Australian government implemented GST, and India is now the latest entrant of the GST regime. And all over the world, more than 150 countries have implemented goods and services tax. Let us now understand how the GST has evolved in India. The customs duty, which was on the import and export of the goods, the excise duty, which was on the manufacture of the goods, and the sales tax, which was on the sale of the goods, had been there from a very long time, even before the independence. In the year 1994, first time the government of India implemented service tax on services. Thereafter, service tax was working independently, central excise was working independently in the government of India. It was only in the year 2002 that the government has allowed the CENVAT credit or the central VAT credit of service tax to be used against the excise, and excise credit can be used under service tax. This was done only in the year 2002. Mr. P. Chidambaram, who was the Finance Minister of India, announced that GST will be implemented in the year 2010 in his speech of 2006-07 budget. So that is how the GST came into being. Then several steps were taken right from 2006 to implement the GST. An empowered committee of State Finance Minister was requested to come up with a roadmap and the structure of the GST. This empowered committee has earlier implemented the VAT all over the country. So the same committee was requested to implement the GST or make the laws and provisions for that. Several joint working groups were created, taking the officers from the state government and the central government to draft the law. The first discussion paper was released in the year 2009 November. Then different GST acts were drafted jointly by the officers of central and state government. And thereafter, in the year 2016, the month of September, the constitutional amendment was done, and then different state and central government passed the respective laws of GST. And finally, the GST was implemented from July 1st, 2017. Let us now understand the tax structure before the GST. In our constitution, there are three types of lists: central list or union list, state list, and the concurrent list. In respect of the central list, there are items or there are services like import, export, manufacture, income tax, interstate sale, for which only the central government can levy taxes. If the activity falls in the state list, like the intra-state sale, sale within the state, entertainment, manufacture of liquor and all that, then only the state government can levy the taxes. And all other items which are neither in the union list nor on the state list will fall in the category of concurrent list, where both central and state government can levy taxes. Now the items which are not there in state list, central list and also concurrent list are called the residual list, in which the central government in India is empowered to make laws and levy taxes. When the service tax was implemented in the year 1994, service was not mentioned in any of the list, and therefore it was in the residual list, and that is why the central government implemented this law. In the pre-GST regime, there were many issues which were affecting the business activity of the nation. The first and foremost issue was that every state had their own laws in respect of sales, in respect of entertainment, in respect of octroi and other things. At the same time, the central government also has different laws. They had separate law for excise, central excise, and also for service tax. So this was creating a lot of issues. People have to comply with so many laws. Then there were multiplicity of tax rate. Every state was able to levy a different rate of tax on the same commodity. So people have to know all the laws, all the tax rates. It was a very difficult process. Then there are multiplicity in the tax administration. You have to deal with the state government, central government. Even in the central government, you have to deal with excise, you have to deal with the service tax, you have to also sometimes deal with the customs. So all this was creating problem. Then there were dual taxation. The meaning of the dual taxation is that the same activity could be called a service as well as can be called a sale. For example, sale of SIM card. Now when the SIM card is sold, it is sold as a commodity and also it provides a service. And therefore both the state government and the central government were levying taxes on that. So it is leading to dual taxation. There are confusion between the goods and services. SIM card is one of the examples, where whether it is a goods or a service, it was very difficult to differentiate. A software development, whether it's a goods or service, very difficult to differentiate. Catering, providing services in the restaurant, whether it's a goods or services, very difficult to differentiate. And so there were a lot of litigations. Then there were problems of taking input tax credit. When your goods move from one state to another state, both were having different laws. So if you have paid the VAT in one particular state, you cannot take credit in another state. That was the problem. Export benefits were also restricted only to generally the central government's taxes. State governments' reimbursement were very, very difficult. Before the GST regime, there were check posts on every state border. The reason was that the rate of sell tax and the rate of CST, that is central sell tax, were different. If the sale was within the state, then you were charged VAT, which was around 15%. But when the sale was from one state to another, it was central sell tax, which was hardly 2%. And therefore there were diversions, malpractices. In order to stop that, there was check post. So if the goods are traveling from one state to another, say from Tamil Nadu to Jammu and Kashmir, then they have to cross so many states and face so many check posts. It used to take so much of time, and also there was a lot of scope of corruption. So all these problems were there in the pre-GST regime, which we have taken care of by implementing the GST. Now let us understand that what was Constitutional Amendment Act that changed the constitution to implement the GST. First of all, what has been done is that we have shifted the items like manufacture of the goods, services, sales from the center or state list to the concurrent list, so that both state and the central government can levy taxes on that. This constitutional amendment bill was passed by the Rajya Sabha and Lok Sabha in August 2016. Since this affected the states also, therefore it required the ratification of more than 50% of the states. Thereafter, the states ratified this constitutional amendment bill. Thereafter, on 8th of September 2016, the Constitutional Amendment 2001 Amendment Act was notified by the government after getting the assent of the President of India. Now, what are the key features of the Constitutional Amendment Act? Number one, that on the GST there will be a concurrent jurisdiction of central and state. Second important thing is central will levy and collect the IGST, that is integrated GST, between one state to another state in the course of interstate sale and also on import of the goods. The imports of goods will also be treated as IGST or interstate sale. Then there was a constitutional of GST Council under Article 279A, which was inserted in the Constitution. And this GST Council is the supreme body for making changes in the GST Acts. One of the important apprehension to many states like Tamil Nadu, Gujarat and Maharashtra, which are basically manufacturing state, were that they will lose revenue because of the GST. And therefore, in the Constitutional Amendment Bill itself, the provision was made that for 5 years the central government will compensate for any loss of revenue which happens to any of the states because of the GST implementation. Another important feature was that the GST on petroleum product, high-speed diesel, motor spirit, natural gas and AVS turbine fuel will be levied from a later date which will be notified by the GST Council. Now, one of the most important feature of this Constitutional Amendment Bill is that the central government as well as the state government has given up their power to implement or the change tax structure. They cannot levy the taxes on the basis of their own volition. For any change in the law, for any change in the tax rates, they have to go to the GST Council. And what is GST Council? Let us understand. The GST Council will be headed by Union Finance Minister and it will have Minister of State and State Finance Ministers as their members. This will recommend the GST rates, exemption and threshold, taxes to be subsumed and the other matters relating to GST. The quorum of the GST Council will be 1/2 of the total number of members. The decision of the GST Council will be done by a majority which is not less than 3/4, that is 75% of the weighted votes. About the weighted votes, the central government has 1/3 of the weightage, while the state governments all put together will have 2/3 of the weightage, and all its states will have equal voting power. So only when you have more than 75% of the weighted vote, then only a change in the GST laws or the rates can be made. So you require central government support plus 20 state support to actually implement the changes in the GST law. In some way you can say that the central government has a veto power because central government's power is 33%, while all the state government's power is 66%, and you require 75% of the weightage voting to make a change, and therefore if the central government says no, then the law cannot change. In the same way, if more than 10 states decide to veto any proposal, then also law cannot change. So in a way, you require the approval of the state as well as central government to conduct any change in the GST laws. And only when the GST Council will recommend, then only the central government or the state government can make any changes in the law. Once the Constitutional Amendment Bill was passed by the Parliament, approved by the President of India, thereafter the process of implementation of GST started. In this process, central government passed 4 laws in April 2017. One was dealing with central GST, other was dealing with Union Territory GST, third was dealing with integrated GST, and the fourth was dealing with GST Compensation of State Act 2017. So these 4 laws were passed by the central government, and the state governments passed law in their own assembly for implementation of the state GST. All states have gradually passed the laws by 30th of June 2017, and thereafter from 1st of July the GST was implemented in India. So today we have learned about the different changes in the constitutional which has to be made to implement the GST. Please take the test after this lesson to know whether you have properly understood this lesson or not. Keep watching the video. Thank you very much.